Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Oh, man. Something like 290 stocks are due to report today, either before or after the bell. So that'll be, again, the theme of the show. Obviously, we'll start with the big guns and Apple and Snapchat, but we got other stocks on our radar this morning as well. We were looking at Lockheed Martin and its peers this morning. We were looking at Match Group, which got Facebooked yesterday. And we'll take your questions in our chat as well, premarket.benzinga.com. Two guests on the docket this morning. First up at 8:35, we are joined by Mike Olson, Senior Research Analyst at Piper Jaffray. He is the Apple analyst there. And then at 9:15, a little late for us, but we are going to wait for Gene Munster. He's the managing partner at Loup Ventures, former analyst at Piper Jaffray, now head of the VC firm. And he is maybe our favorite, at least, Apple analyst out there. So Mike Olson and Gene Munster will be on the show today. And those are our guests. Joel, how are the S&Ps doing this morning?
We're flat, basically, trading up a couple ticks at 52.75. Your pre-market high at 58.50 matches the after-hours high at 58 even, so there's your big number on the upside. Things open up after that considerably. On the downside, 43.25. That's your pre-market low. That was your daily pivot. So need to hold that, or else we could fall back into the 26.30 handle. Got a level for you guys and gals in crude. Take a look at the 67.10 to 67.30 area in crude. That has been 3-4 out of your last 7 lows. That's a big area for crude to hold. Gold in the in the green by $3 at 1309.70. Silver in the green by 24 cents at 1637. And how's Bitcoin doing? I don't have Bitcoin up on this monitor. Bitcoin back above 9,000. This is the futures trading up $195 at 9,170. Dennis, all I have to say is when the streak is that bearish next time on Apple, kick me aside the head if I don't buy it. Boy,
I tell you, everybody, the masses are wrong every single time. And even like they had me going too. I mean, I was talking, I was like, I don't know. I said long term I still like Apple, but I was concerned about the quarter. So, everybody, Guy Donnelly was saying he thought it might trade with a 150 hand or on it there after the report. Everybody was leaning the wrong way on this thing. It rallied yesterday ahead of it, and it just kept on going. And now we're trading up here at $177. It's an enormous rally here for Apple. It's obviously good for the Apple suppliers. And we're looking at stock, 180 is what we were saying is going to be major resistance. I'm still going to stick with that level, the 180. I'm sticking with this in my long-term investment portfolio. I still like Apple long-term. Short-term, it's a big pop. It's a lot, but it's hard to fade. And you know what? It keeps climbing here. We've had a lot of volume trade after hours, a lot of volume pre-market. This does not want to give it back. It wants to go even higher here because it actually popped up to like 176, 177, and then dropped and consolidated all after hours are in the 174 handle. Well, it's starting to lift here again. So you're just seeing a lot of strength here in Apple. It wants to go higher, but it's not dragging the rest of the market along with it. We'll talk about that in a second.
Spencer, do we even need to do the report or?
Give
us the numbers.
Well, there's a lot of numbers, so I'll just read through the whole lot of them real quickly. So we know with Apple, there's more to it than just the EPS and the revenue, but we'll do that first. Q2 EPS, $2.73. That's a 3-cent beat. Sales of 61.1 versus 61.19 billion. So a slight miss on the sales, but we don't really care about that this morning. It seems like we're looking at Q3 sales guidance in line at $51.5 to $53.5 billion. We've got a quarterly dividend raise from 63 cents to 73 cents per share. We have a $100 billion buyback plan, and we have Q2 iPhone units. We know there was a lot of questions about the iPhone X and that being weak. Well, they sold 52.5 million iPhones last quarter. That was in line with where analysts were hoping for. And that is what I've seen as one of the reasons why they're buying the stock this morning. We have Mac units and iPad units. We don't really care about that as much as we care about iPhone. So we've got the buyback, the dividend raise, and the not weak iPhone sales as the highlights for the quarter.
It's good numbers. They like the buyback. They just wanted reasons to buy it, and they found the reasons. And the masses and the media will always find the reasons after the fundamental reason for the move, even though everybody's just leaning the wrong way. And the market likes to punish the maximum amount of participants. Too many people bearish Apple, and it gets a pop.
Just quickly, a couple analyst moves. Hubert Katie and Morgan Stanley lowered his price target last week from 203 to 200. Got the beats on one of those days. Mark Moskowitz at Barclays did the same, lowered his price target from 168 to 157. And hats off to D.A. Davidson and Mo Ness. They initiated coverage within the last couple of weeks with price targets in the lower 220s.
And
I'm just going to give you one number because that's what Dennis likes. I'm going to give you two numbers. Pre-market high is 178 even. And then Spencer, if you got the daily up there, I mean, look at that double top at one set, just under 179, 178.82, 178.94. That's a big level as well as the all-time high. So that's my numbers. Coming back on the downside, Dennis talked about that long period of consolidation after hours and pre-market. That consolidation found big buyers at 173.70 area. So that will be your support this morning in Apple.
Let's talk about the suppliers. They are all getting a lift here. SWKS trading up substantially. The pre-market's up 2.86%. There was also an initiation there to outperform. I think it might have been Baird. It was Baird initiated an outperform right ahead of the Apple numbers there. So gutsy call from that analyst there, but it's working out for him. SWKS trading up in the pre-market. CRUS, Cirrus Logic, another supplier, $39.50, trading up $1.61. You can look at QRVO, which is another one. It had a big day. Full disclosure, I'm long a little bit of QRVO. And then AVGO, Broadcom often moves up within and it's trading up $3 with the Apple numbers as well. So the suppliers are up, Joel.
SWKS also had a Kramer pot yesterday.
Oh, did it? Okay, yeah. Nice. So Kramer is out bullish on that too. So lots of reasons for SWKS to be going up. But if you do the math here quick, and I always like doing the math, look at the Qs. The Qs are trading up 0.33%. Well, if you go to Apple, Apple's trading up 4.5%. Apple's over 11% of the index. So quick math says that it is almost, it's probably almost 0.5% on the QQQ. QQQ is only up 0.33. What's that telling you? It's telling you that Apple is more than the gain in the QQQ. It means the other 99 components combined in the Qs have to be down here today. So you're going to see some tech stocks that actually open in the red. And I'll tell you the most likely candidates who are going to be very red here today is something from the Apple conference call as well. During the Apple conference call, CFO came out and said he expects DRAM prices to fall in the near future. When he said those comments, Micron went into a free fall, did a swan dive because MU was trading up $1 with the Apple report. And now actually MU is in the red. If you look Western Digital, it went to the red. Intel barely holding on. Actually, no, Intel is in the red here now too. Micron's the first one you see when you think DRAM prices, but then it brought down all the semis. So we're seeing a lot of weakness in the semis here this morning, which would be unexpected. When you think Apple's going to post large numbers, you think the semis are going to pop. That is not the case because probably comments from the CFO on the DRAM prices knocked down Micron and company. And if you look Taiwan Semiconductors trading down, there's a lot of stocks. Semiconductors trading down here this morning. A lot of people scratching their heads, but if you're looking for the reason, it's those CFO comments from Apple.
Okay, Dennis, you just mentioned 8 stocks. So do you want technical analysis?
No. And that's just it. And the one thing is we try to get as much information for you on the show. And I always say, we like to do charts, and there's a lot of technical analysts that we bring on the show. And I think there's a lot to technical analysis, but it's only one consideration. So, we don't always have to look at a chart to know that the Apple suppliers are going to be up. I mean, I don't care what the chart of SWKS looks like. I don't care what the chart of CRUS looks like. When you see Apple beating, the Apple suppliers are going up. It doesn't matter what the chart looks like. So technical analysis, I always say, works very well in the absence of news. When there is news, it will sometimes give you a level, like we just used with Apple, where it struggled to before. But the direction of the move is usually going to be related to the news. So news trumps technical analysis every single time. But technical analysis can be used to, measure how far you think it's going to go, or, even if you think it's going to be a level that's going to run into that it's going to struggle at. So, that's why we got to use the combo approach. So all I was trying to say is that, the supplier is going to be strong. And all I'm trying to say is as well is that the semiconductors are weak here this morning because of Apple numbers. But let's go to Micron because it's one of the main ones. It was obviously, DRAM prices affected the most. It's been a stock that has been in the absolute doghouse here. So basically, since I put some of it in my investment portfolio. So I got this one dead wrong. Never chasing, never listening to media again when I go into investing. But anyways, stock's down here at $46. I don't mind it down here. I still don't mind it. I'm still intending to add here. It's just never really stopped going down. So anyways, but I like the level. You know what? Maybe I'm going to stick a little bit in my invest portfolio, a little bit more here because I've only bought a third of the position. I'm supposed to buy more Micron. I have the money sitting there waiting to do it, and I've just been cheap. And I keep thinking I'm going to get cheaper, and it's been a good to wait. Now I want to buy and average down. Never found average down.
I don't know where to start on this one because I knew this was going to be a disaster from when you started buying it.
Why didn't you tell me that before I bought it?
I did. I tried to make a bet.
You didn't.
Won't make a bet.
Everybody's saying $100. All these analysts came out with a $100 price target. That was the top.
Okay.
Here I am always saying, when all the analysts get on one direction, that's usually the top. And I went exactly what, and I actually believed them this time. I don't know why. You should have knocked me on the head. Chat, you should have knocked me on the head too and helped me out on that one. But anyways, that was the top.
Can I just make a general recommendation, Dennis?
No.
No.
What do you got for me?
I just think you should just cut. You only bought a third of your position.
Just cut it rid of it?
I think you should just get rid of it because you just, yeah.
That would be when I sell it to the bottom.
No, because you're going to, I don't know, because I just have a feeling you're behind the 8 ball on this one.
And I never add to losers.
And it's not.
I don't even know why I only bought a third. I'm glad I only bought a third, but I don't know why I did that.
So just get off. Just get out.
Forget about it. Move on.
Yeah, that's what I think. But you did have support in here, and actually they did hit it in the pre-market. But I got a level for you, Dennis. We're trading at 46.31. Keep an eye on 45.36. That splits the two lows from Monday and Tuesday. So that's your major support. So maybe hold on if it breaches there. There's some other daily lows, but that doesn't take you down until 43.90. So got to hold that double bottom, only trading down 46 cents right now.
Jump over to other earnings stocks. And I'm hopeful here this morning that eventually somebody might sell Snap worse than I did. Man, people just listening to the show for the first time today must think, man, this Dennis is a terrible trader. Buying Micron at the top, selling Snap at the all-time low. Yes, it's true. I'm the only person on the street that talks about my losers, I think. And actually, I talk about my losers way more than my winners. So anyways, we go out to the monthlies and you want to look at where Denny sold his Snap position. It was, in fact, at 11.28. Of course, I was a day trade. Actually, I lost a dime on it, but I just like to say that I sold 11.28, and that is the all-time low in Snap. So part of me wants to always be able to say I sold the all-time low in Snap. So I don't want it to trade lower than 11.28 here today. But then part of me is done with it. It's been a year now, and I'd like somebody else to sell Snap lower than me. It's 11.39 here in the pre-market. Can it trade below my 11.28 bottom? That was the Denny bottom, the 11.28.
You know what you could do? Before Spencer gives us the numbers, you could just start hitting it, and getting short and reverse, and then cover. It's going to trade $11 today, Dennis.
How do I know? If I knew that, I would sell 11.38 right now. How do I know that? I already sold the low on it once. You want me to sell the low on it again? I could do this then twice and say, look, I not only sold the 11.28 low, I sold the 11.38 low back on May 2nd show, which was almost as bad as I could be like make the W, the double bottom.
All right, Spencer, give us
ADP numbers just came out. Stop ADP.
Oh, okay.
It snuck in on us there. I got
Dennis, you're like, I can't
204,000 jobs, Joel. 204. I don't know what the estimates were though.
Estimate was 200.
Okay, so non-event really. 204, 200. Wah, wah.
All right. Back to Snap we go.
S&P's moved 1 cent on that. SPY moved 1 cent.
Snap Q1 EPS 17-cent loss, in line with the estimate. Sales 230 million, 230.666. That can't be a good sign. $1 million. Estimate was 243, so they missed that as well. Daily active users, we know that's the key metric for a company like Snapchat. Oh man, they only rose 2% quarter over quarter. That's the slowest growth sequentially since they IPO'd. Up to 191 million daily active users. We have that was pretty much it, really. I mean, the daily active user growth is what you want to see. Oh, that's not 2% is not going to cut it.
No, and this company's not making money. They got, this platform issue that apparently nobody likes anymore. And you know what? This is just, I don't hear anybody talking about Snap as much as they were 2 years ago. Like, I don't, do you still use it? You guys were using it a lot, Spencer. Are you still using Snapchat?
I still use it. I don't use it as much as I used to.
And and my wife was actually, she'd do that little puppy dog thing, make you take a picture and you do little puppy dogs and the hot dog and all the other things, and that buzz is all faded.
I think the stories, I think you're going to see pops, but I think the stock's under $10. And when I look at this next year, I was going to say, I never really was good at using Snapchat to begin with, and then with the redesign, it's even harder for me. So I just never really got it, and I knew how to do one thing, and I did that one thing. I don't know. Anyway,
what is the market cap now? What's the Snap market cap?
Well,
I'm just curious. Let's go grab.
Well, we're trading at 11.44 right now, so I don't know what it is with that.
Well, we're gonna go grab the number. All that matters is market cap, really. It's like a price, but it's still worth $17 billion. Okay, what's Twitter?
Spencer, when's the last time you used Snapchat?
Yesterday. I mean, I use it most. Okay. I use it most days, but I used to use it constantly, and now I don't. Now I maybe use it 5, 6.
So Twitter's worth 22 billion. Snapchat's worth 18, almost 17.5 billion. I mean, I don't know. I think Twitter is just, and obviously maybe not comparing apples to apples, but it's still a way of communicating through social media.
Yeah,
I'm a fan of Twitter. I always have been. It's the only thing that I really use from social media. I mean, I hardly use Facebook as well, so maybe I'm biased there, but I just think that Twitter's worth a hell of a lot more than Snapchat.
I'm only one person, but I would estimate that my time on the app is probably less than a minute per day, maybe 30 seconds a day on the app. It used to be a couple minutes per day, easy. Anyway, on to the stock.
All right, all we need to do is talk about the all-time low, and that was 11.28 back in August of 2017. Buyers are stepping up, though, here, Dennis. I think they might be trying to defend you here. 11.34 is the pre-market low.
They want Denny to continue to have the all-time low. They are trying for me.
And what about the last report? This thing went to, 21, 22?
Why did it do that? Yeah, that was the best shorting opportunity of all time in this stock. Like, that's just was such a ridiculous pop. It was $14 and went to 21. Here we are 3 months later and is well below that. Man, what an opportunity. Was there some other catalyst in there? Was there something else besides just the earnings? Like, holy cow, man, people got excited.
Looking at last quarter's earnings, or the two quarters
was there
ago.
Somebody said something? Did somebody take a position? Was there like...
It was 2 quarters ago. No. It was on that.
I'm saying from the...
I mean, that's right before the air came out of the entire market. So, that's true. They reported at the right time because really the market had really not started crashing yet. And it didn't crash, obviously. But that was like right near, right before the ugliness started in the overall market. But wow, I just can't believe it got that high.
Yeah, I don't know. I mean, the earnings per share came in 3 cents above the estimate, but they're still losing money. So I don't know. Honestly, it wasn't like it was an amazing quarter. It was fine. I don't know.
Analysts, man, these guys got smoked. On February 7th, Raymond James, Aaron Kessler, RBC Capital, Mark Mahaney, JP Morgan, Doug Ambush, and Bank of America, Justin Post, all upgraded the stock.
What day was that?
The 7th.
The day after. They all upgraded it.
Yeah, actually.
Right at the top.
Wait, actually, Aaron Kessler, let's take him off there. My apologies, Aaron, if you're listening.
Is there any anybody that's downgrading it today that upgraded it that day? Because we have multiple downgrades here today. Spencer, go to that pro and who's downgrading it today?
So far, I've only seen the Evercore.
And I saw Evercore. I also saw somebody else. Hang on. I thought I saw somebody else. I'm going to find out. I thought I saw somebody else. So was Evercore one that upgraded at the top and now they're downgrading at the bottom?
No, they upgraded it. No, they initiated it. Wait, what? Evercore.
Summit Heights is downgrading it. I don't follow Summit Heights. I'm not sure about them. There was more.
Hats off to Mark May, though, at Citigroup. On the 20th, he downgraded it from neutral to sell with a price target of 13.
Good job.
Yeah, and then he's the only one. And then it's
Oppenheimer downgraded today too. Oppenheimer.
Okay. Wow. I don't know. Keep an eye on 11/28. So Josh Nuno in the chat was saying everyone was saying that Snap was supposed to be profitable this quarter. That's why, it went up. That must have been about the prior report. But, you think this one's going to zero? Of course, we don't give trading recommendations on this show, Dennis, but...
I don't think it's going to zero. But no. I think in my opinion, and I think you're going to see some wicked pops here and there. It's going to come down a long ways from the 21. So there's going to be these little short squeezes that continue to happen. I think if we do a 1 year European call right where, the European ones, you can't exercise them early. They only do if we go 1 year from today, I think it's under $10. I think it's easily under $10. I think it might even be under $6 or $7. So I think there's another 50% fall here happening the next year, in my opinion. So, we'll see in a year from now. I'm not shorting it though, because I can't handle those squeezes when things pops from like 14 to 21 on the last report. There's going to be more pops in there that happen on you. But I think this stock is I'm not a fan of what their product is. Not at that valuation. Not at $17 billion. Joy on mute.
All right, where should we go next? I don't know. He's around. Is he on mute?
I just want to deviate because we see things in the chat and then we let them go and we don't get to cover it. And BZ Tokyo put it in the Google chat here a while ago. He's asking about IntelliStat, and he's asking, is this 30% move warranted? Is this a short squeeze? So I don't know the stock at all, Dennis. IntelliStat, does anybody have SA? So what's that mean? Is that traded overseas or something? SA, IntelliStat SA?
What are you talking about, Joel?
Letter I.
Well, give me the tickers and then I can talk to you about it. IntelliStat. I follow this company not at all either. Wow, what a move though. April, that's the first time I looked at this chart. From $3 to $13. I have no idea what the story is on this. I can just tell you this is in rocket ship mode. So that looks like upside capitulation to me on this chart from the last day, but I've seen these things get wild too. You get these smaller market cap stocks and they can just take off, but I don't know the story whatsoever either.
No, there's, not a huge short interest ratio. Spencer, has there been any news on this one?
Well, they had earnings. Hold on 1 second. I'm pulling up the chart.
It's aerospace. Market cap's $1.5 billion now. So obviously this went from in the, 2 weeks ago, it was probably about 400 million. Now it's 1.5 billion. Stocks tripled here in 3 weeks. All I can tell you is when I see stocks do stuff like this and go into rocket ship mode, this is like chasing. I mean, these things, for day traders, sure, you can make some money, but more often than not, if you're buying this thing at 13 when it was $4 back in April and you look at it a month from now or 2 months from now, you're probably losing money. So I don't know what the top is, but I'm not chasing it. I don't know the story, so I'm not going to make any price predictions. I'm just going to say your average chart that looks like this, when you're buying them up here, you are chasing big time, and usually the people who chase get hurt.
You've had going back here since April 3rd, you have all up days. You have one unchanged and 2 down days over the last month. Big move yesterday on big volume. The only thing I'll say about this one is you want to see continuation through that 1386 high. See if people come in and protect that. Currently trading up 1324. Don't want to see it fall under 1303. That was the close from yesterday. And if you're looking to get out of this one or possibly short it, see what happens here, because it traded some decent volume, but yesterday was a blowout volume day of 14.2 million. almost over 4 times the volume the previous day. So let it hang out, let the volume come down. And then if you're looking to either short it or get out of a long, eventually it's going to run out of buyers out here. One heck of a move, though, keeping an eye on the close. Yeah.
Let's jump over to, and Spencer talking about it in the chat, is this Facebook story that they are getting into the dating game. And this was not good news for Match.com. MTCH getting annihilated yesterday. Spencer, give us the headline, and we'll just talk about the breakdown of what happened yesterday with Match.
I mean, that is the headline, right? But
I said the dating.
Match,
so what exactly
Match essentially, we always say a company gets Amazon. Well, Match got Facebook yesterday at the Facebook Developers Conference. We have Zuckerberg saying that they're going to be adding a new dating features to the Facebook platform. So you never want to see that. You never want to compete directly or see your core business get swallowed up by one of the big guns, right? Which Facebook obviously is.
I mean, you look at Match, you look at this chart, it was $46 when that news came out, and it was $40 10 minutes later. So it's dropping 15%, and then continued to fall. The parent, which you were telling me, Joel, IAC, also got annihilated as well. That stock went from $160 down to $133. So both stocks really taking it on the chin off of that news. We've seen these situations before, though, Joel, especially with Amazon. When they bought Whole Foods, all the grocery stores got annihilated. They were all going out of business. Even Costco, falling $20 that day. They all came back. Do you think this is a situation where Match, is going to come back, or is this just product scare you enough that you're hands off here?
I'm just going to go on technicals, and I'm just going to keep an eye on yesterday's low in both stocks here. 36.80 was the low. 35.80, excuse me, closed above that. That coincided with another low at 35.45. So absolutely critical. The other thing that's concerning here is you lose $11 and you're up a penny in the pre-market. I mean, no one's coming out to defend this stock. It's not getting any kind of a bounce. So I'm kind of hands off on this one. And, just Dennis or Spencer, I know you're not young enough. You guys remember the dating game? Host Jim Lang that was on TV? Dennis, you remember that at all?
I've seen the dating game, yeah.
Of course.
Yeah, I mean, just say
if there were shares in that would be down today.
Exactly. But yeah, keep an eye on yesterday's lows in these things and the IAC. And I read an article a while ago about Barry Diller, and I think if you actually break down his performance, not including yesterday, but I think he had some better returns than Warren Buffett going over a long period of time.
Talking the IAC guy.
Yeah, the IAC guy, Barry Diller, IAC Interactive. Big level in this one. This is up $1.17, getting a bounce, 131.10, and then that coincides. Let's just call it 130. Your major support in this. That was your February 9th low. So big hit, man, for these things. And Facebook is getting into the dating service. So I'd be careful. I mean,
it scares me on those stocks.
Yeah, but I mean, what if you're in this thing from $38 and then from February 2016? What people have to realize that there are a bunch of day traders probably tried to buy it yesterday, and there's some people that are just going to say, "I'm out." That's going to take a long time to get that back. So
everybody in the last 3 months is hoping to get their losses back. So you're tough sledding as you rally. This isn't bouncing back and going to 42, 43 tomorrow. It'll be tough sledding. It gets up $1 or $2, then maybe met with sellers. If it goes up another $1 or $2, going to be a lot more sellers up there. It is just thick. This is like you just watch the all-time high get put in. It's like when you look at a chart like this, you feel like the all-time high is in.
I have to agree with you. I really have to agree with you on this one. Okay.
All
right.
5 seconds to imbalances. We'll give you those, and we'll jump into the MasterCard earnings because they reported just after we started the show here this morning. Just looking quickly at imbalance land, and you know what? It's mixed. There's some buys, there's some sells. It's kind of mixed here, though. More to the buy side. Bank of America, 100,000 to buy. Alibaba, 74,000 to buy here this morning. Morgan Stanley, 42,000 to buy. I've seen some buy imbalances in the bank stocks. And, it's Fed day, and we didn't even mention that, obviously. So we're going to have a Fed decision here today. And sometimes banks are strong ahead of that report, so ahead of the Fed numbers. So interesting that we're seeing a few buying balances there. Other than that, they're pretty small.
B. Trudell, he's remember when Amazon bought Whole Foods, they really killed a lot of the grocers. And some of them did come back. How's Kroger doing, man? I haven't looked at that.
Well, Kroger's down here today.
I thought they all
have a
came
tough
back.
day too, because there is a headline too, and I don't know if they're going to have a tough day or not. I'm actually bobbed a little bit because I thought overshot last night. Kroger though has a headline. Well, not Kroger doesn't have a headline. Amazon had a headline with Whole Foods. And do you have that headline in front of you? There's multiple headlines from Amazon here today. There always is.
Yeah.
But it was something like dropping prices at Whole Foods or something.
Yep. They are going to this is for Prime customers or members, I guess you want to call them. But yeah, they are planning to cut prices at Whole Foods for Amazon Prime members. That was the first headline. And the second headline from this morning is that they have offered what was there. They made an offer for a 60% stake in Flipkart, which is at par with Walmart's bid. So we now have Walmart and Amazon essentially bidding for Flipkart.
That's in India. Where is this Flipkart? Where's Flipkart?
Is it in India? Is it in Singapore? It might be in. It's in India.
I think it's India.
It's India. You're right.
Okay, so Amazon wants Flipkart, Walmart wants Flipkart. They're fighting for Flipkart. So multiple headlines here this morning. I mean, okay, dropping prices again. Is it really a big issue here? I don't know. Kroger is trading down on this news slightly here. I don't think this is going to be like a whoosh, though. Like, look out, Walmart's coming after you, or Amazon's coming after you again. I mean, we already know Amazon's after them. That's why they bought Whole Foods. So I think you get down to 24 in Kroger, I think you find buyers. So I'm a buyer of the Kroger pullback if it gets down to the 24 area. And then MasterCard earnings came out there just after we started the show. Do you have those numbers, Spencer?
MasterCard, yes, I do. Pull them up right now in the Pro. Here we go. Q1 EPS $1.50 versus $1.25. Sales $3.58 billion versus $3.25 billion. So nice, solid beats on earnings per share and sales for MA.
Okay, Joe, I'll take this one over because I got some alarms going off at me.
Okay, all right. MasterCard, a nice beat here, trading up 727 here at 187.52. That far exceeds the all-time high that was made at 183.73. So that all-time high, and folks, just be a little careful on this one, because for 7 sessions in a row, someone really wanted out of stock between 182 and 184 with that all-time high. So you don't know if they got all their stock done. You don't know if they wouldn't be, mind taking off another piece here at 187.80. Trading at the highs of the session now, right here, right now. So I don't know. Maybe try if you're looking for some profits, or you took it home or have some options. Look at the half and whole numbers, really 188, 188 and a half, 189. Scale your size up, though, as you sell. And when they stop lifting your offers, then you're going to need to start hitting bids. SPOOs are just hanging unchanged here, Dennis. They can't really catch a good bid. But we want to talk some more Apple now, huh, Spencer?
Yeah, we're going to take a quick break, unless you want to say something, Dennis.
No, I was just going to say, I always like MasterCard because when I look at that, it makes me smile, because it's the one thing, like in, long-term investing can sometimes work, because I've been in this one for basically 10 years, and I'm averaging at $16, and I look at them up over 1,000%. So sometimes it's long-term investing, if you just buy and hold, actually does work. Sometimes it doesn't, sometimes it does. It worked for me in MasterCard.
Who knew? All right, well, we'll be right back. Mike
Warren.
Yeah, right. You and Warren and no one else. Mike Olson, Managing Director, Senior Research Analyst at Piper Jaffray. We'll be right back with Mike to talk Apple in a moment. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick on now with Mike Olson from Piper Jaffray. He's a senior research analyst there. Mike, how is your morning going? I'm sure it's been a busy morning for you.
Absolutely. It's been busy with the Apple numbers, and we continue to chug our way through the earnings season here.
So I want to ask you, before we get into the details of the report and everything, do you follow other analysts at all besides Gene Munster, what they say? Because, there was a lot of pressure. I mean, everyone was predicting, this is going to be a bad quarter and everything. And that you got a really tough job, crunching the numbers and, coming up with your predictions. Do you ever pay any attention to what other analysts are doing on the street?
Yeah, absolutely. I mean, if not to just, hear kind of what the other chatter out there is, just to get a sense for what sentiment may be on a stock. And this is an interesting example of that where, as you kind of alluded to, going into the quarter, the sentiment had gotten really negative related to a lot of component supplier concerns and other, again, quote unquote chatter that many people were, kind of describing related to Apple and potential for weakness of iPhone units. And as is often the case with the chatter from component suppliers, iPhone sales just weren't as bad as feared. And the June quarter guidance reflects a far better picture than many had painted about what the next several months could look like as well.
Okay, what stood out to you in the report? What did you really, what was the surprise in the report to you?
Well, I think definitely, investor fears related to an iPhone miss were, again, really high, and March quarter units came in essentially in line. So I think that was a surprise for many. For iPhone 10 in particular, where investors were the most cautious, the company said iPhone 10 continues to be its number one selling device. So the mix continues to be solid and I think better than what most were anticipating. And then perhaps most importantly, the June quarter guidance, which calls for revenue essentially 2% above consensus at the midpoint, implies iPhone units were ahead of where street estimates had fallen to in recent weeks. So those were all things that we felt were critically important just given the size of iPhone, but then certainly the services revenue beat was much more than expected. Services revenue beat consensus by 10%, accelerated to 31% year-over-year growth in the March quarter, up from 18% in December. So that was an incredible number.
We're on the line with Michael Olson. He's a senior research analyst at Piper Jaffray. What didn't you like about the report? What was a little bit disappointing?
Well, I think not necessarily relative to our numbers, but again, going back to what maybe other consensus numbers were suggesting, iPhone ASP was lower than consensus. It wasn't significantly different from where we were at. We were at a $730 ASP. The number came in at $728, but I believe consensus was more in the $740s. So I think, that shows that, again, iPhone mix was solid as far as the iPhone 10 in particular, but it maybe wasn't as good as what some people were hoping for.
Mike, or Dennis, you want to go?
No, go ahead, Spencer.
All right, I was going to say, Mike, for a while, it seems like the story with Apple, we've been asking about, well, when can they get something going besides the iPhone to really drive the company forward? Is that still a concern of yours since iPhone is still the clear leader? Not that that's a bad thing, but we're looking to, for other areas where they can really show strength. And is the fact that the iPhone is still so far and ahead above everything else still a concern to you?
Yeah, I mean, I think right now it's not a concern just because you're right. iPhone, makes up the vast majority of the business. We always talk about it as being, in some ways, nearly 80% of the business. If you think about it being iPhone directly being 60% of revenue, and then services being another 15 to 20%. Most of services being tied to iPhone. You're kind of looking at, nearly 80% of the business that's tied to that one device. I think the good news is the innovation coming in iPhone will be enough to sustain the story over the next few quarters. And specifically looking to the fall, we expect Apple will kind of widen the iPhone 10 out into 3 versions. The iPhone 10s, the 10s Plus, a larger screen version, and then what we're calling the 10 Lite, which would be kind of a stripped down version of the 10 that has an LCD screen instead of an OLED screen to kind of reduce the cost and have a lower priced option. And we believe this could drive investor anticipation around a better upgrade rate, and it could drive actually higher ASPs, which we're not really modeling for.
Hey, Mike, Dennis Dick here. I'm just going to change the subject on you and take you over to esports, because I know you cover Activision, you cover EA Sports. And this esports thing is, something that's amazing to me that, there's a market for this, first of all, because I played video games as a kid, but I can't believe this many people will actually watch, video games being played by other people, which is, incredible here. What are your thoughts here, just on esports, and what does that mean to ATBI and EA?
Yeah, esports is to a lot of people a shocking phenomenon, but it's a real phenomenon, and esports is huge. There's a lot of estimates out there indicating that it will be, a larger than $1 billion business this year from all the different sponsorship revenue, broadcast rights, et cetera. It used to be really hard for us to quantify what esports could mean for Activision and EA. It's gotten a little bit easier, especially for Activision with the company's Overwatch League. The Overwatch League, we now know, is generating about $60 million a year from just the essentially team rights. So the team owners are paying Activision $20 million per team, and then that gets recognized over a 4 or 5 year period. So with 12 teams, they're recognizing about $60 million a year in just the team right revenue. And then they have a deal with Twitch to broadcast those Overwatch League events, which is about $90 million over 2 years. So $45 million a year, half of which we believe Activision gets to keep. So that's another 22, 23 million. So now you're at kind of 82, 83 million of revenue, plus another probably 15 to 20 of sponsorship revenue. So Activision alone should be able to generate around $100 million of revenue this year from esports, from the Overwatch League. So it's definitely something that is still, generally immaterial to their overall business, but it's growing, and it's certainly measurable at this point.
Mike, I'm going to go back to Apple for a second. You alluded to the fact that as is often the case with Apple suppliers, the way people are leaning and the headlines aren't necessarily indicative of the reality. So should we not be paying as much attention to headlines and reports and feelings that Apple, or iPhone sales will be weak or strong, during a quarter?
I think you're probably right about that, in the sense that we've seen enough quarters now where the, again, kind of component supplier chatter has been more negative than the reality of what's played out. And I think part of that may just be that, first of all, component suppliers, you have to take what you're hearing about what they're saying with a grain of salt, because they're not supposed to be saying anything. So you really never know the kind of validity of that information. But I think the other thing is just that component suppliers don't have a full view of what's going on in the Apple ecosystem, and Apple often is dual sourcing those components, or triple sourcing, or beyond that. And in that case, a certain component supplier may not have a full view or full picture of what is really going on for overall iPhone demand.
Cool, because I've been wondering that for a while now. So it's good to get an analyst to kind of confirm my my opinions on that. You also cover, we mentioned EA and Activision. You also cover Netflix. So can you give us a reaction to the Netflix report? They're spending ungodly sums of money now on original content, and we're seeing that space really starting to heat up between them and Apple spending on content and Amazon spending on content. So where is Netflix for you right now?
Yeah, we continue to like Netflix, and it's kind of a if you build it, they will come situation where they're building up the content and they are coming in the form of subscribers, and that's resulting in improving growth and ultimately improving revenue and improving contribution margin, overall profitability. So it's working. The flywheel is working. I know that there's certainly a lot of nervousness out there about the amount that they are spending in the competitive environment, but you just have to look at this quarter. Netflix international subs have exhibited really strong growth, but even with that growth, company only has about 13% market share of internet households outside of the U.S. and China. And compared to the 60% or so market share they have domestically, I'm not saying Netflix is going to have 60% share of international internet households, but it just shows there's a lot of room for continued penetration and growth outside of the U.S.
Last one, and then I'll let you go here. But Amazon, we finally got some Prime membership numbers. Did that number surprise you at all? And how does it color your future opinions on Amazon?
Yeah, as far as the Prime number of 100 million worldwide subscribers, that's actually pretty close to what we were thinking, and we think there's about somewhere in the high 70s, so 77 million specifically U.S. Prime members. So there's obviously a huge positive from the stickiness of that subscriber base, as well as just the kind of increased volume of products that Prime members tend to purchase relative to non-Prime members. And then when you add in the $20 price increase for Prime, that's an incremental 1.2 billion or so of revenue we are estimating, which would obviously be potentially high margin revenue, although we really don't know what they're going to spend on for content or other fulfillment capabilities to support Prime. But 1.2 billion is a nice additional chunk of revenue to have. And Amazon obviously had a really strong quarter, even with retail growth slightly decelerating. AWS and other segment revenue were extremely strong. Other segment revenue is primarily advertising, and that continues to be a growing business for them.
Mike, before we let you go, though, I got one more tough question for you. I mean, Apple is just bringing in unbelievable amounts of cash. They repatriated cash from overseas. They're adding to their coffers. There's only so much stock you can buy. What are they going to do with that money? Do you see any potential takeover targets, or, also like the whole AI field? Are they going to go somewhere? What is Apple going to do with all that money?
Yeah, I think when you look at Apple, it just hasn't been, as you guys know, in their DNA to acquire large companies. I don't think that's going to change in the near future. I think we're going to continue to see Apple adding in smaller technology deals here and there to augment certain components of their business. And you're right, like AI, augmented reality, anything related to those types of categories, education, healthcare, all of those buckets are going to be areas in which we're going to see Apple likely adding small incremental pieces to the puzzle over the next few years. In addition to that, though, we do expect that they'll just continue to be aggressive on buyback and continue growth of their dividend.
Mike Olson, Piper Jaffray, thanks for joining us today, Mike. Have a good one.
Thank you.
All right. Great segment there. Great answers, very succinct. And you know what, folks? This MasterCard, I don't know what to tell you here. We're keeping on going. 189.30 up 905. Dennis, are you going to let your stock go at 190 here?
No, I'm in it for the long haul, so still sticking with it. I like it when it goes up, though. New all-time highs makes me happy on MasterCard. I mean, Visa has already had its earnings reports. So it's not surprising it's not popping like nearly as much. You got to think, I'm thinking big hole numbers here on both of these. If I'm, looking for resistance, MasterCard 190, I'm thinking about now. And if I look at the book, let's just go look at the MasterCard book and see if we see anything jumping up. You know what? There's some size at 185, even 24,000. That'll hold down a little bit, but this trade so much stock, 208,000 can be nothing. 190 is 23,000. It's not that much either. I mean, it can chew through that pretty easily as well. But if you're thinking psychological levels, 190 would be the next one. Visa, I gotta think there's got to be some size at 130, and I'm going to go check it out. I mean, we're a ways away from there. We're trading 128.46 here in the pre-market. Visa has 56,000 at 130, so that is significant. So if I'm looking for resistance and if Visa really gets a sympathy move here, I don't think it's going to get up that high, but if it does, maybe in the upper 129s might find some nice resistance.
Okay, all right. Not helping out the NASDAQ is GILD, Gilead Sciences, trading deep in the red. Spencer, give us the numbers.
EPS $1.48, then missed the estimate, which was $1.64. Sales $5.088 versus $5.38 billion. So big misses for the EPS and sales in Q1 for GILD. Gilead, they did, however, reaffirm their outlook for the fiscal year.
Stock in the beats. It's been a value trap for a long time. So glad I had this one in my best portfolio, and I sold it up there when it got up to $84. So glad that I sold it. That's the good news. The bad news is that I bought Allergan with the money. It's been just as bad. So it didn't help me. But, you look at the action, Allergan had a pretty good report and they kill it. I mean, they just don't like these stocks right now. What it stays in favor, stays in favor. What's out of favor seems like it's out of favor, and stays out of favor, it seems like for an eternity. They're just out of favor. Biotech stocks are not in favor. I mean, you can look at the IBB and it's been leaking here too. Yes, is there value in it? Sure there is. I mean, they got a ton of cash. There's value, but it doesn't stop the stock from going down. They want to see growth. They went out and they bought some growth there. Obviously, when they did with the Juno, was it Juno? Juno they bought, right?
I think so.
Or was it Kite? Somebody bought Kite. Somebody got Juno. I'm getting them backwards there. Anyways, in any regard here, they were trying to buy growth. That's what they need. They need some type of growth going, and market wants to see more growth, and they're not seeing enough yet. And that's why the stock's down.
Interesting level where we're trading at right now. Your pre-market low was 67.70. You're getting a little bit of a bounce, and you know how I like to go to my longer term charts. And back in July, almost a year ago, you had a low at 68.54. So it looks like you're catching a little bit of a bid there. I think maybe some more work to do on the downside. The real area of support in June of last year, we got down to 63.76 in June and 63.88 in May. So if you're really looking to pick this up on the cheap, maybe get your bids out there. It's $64. I don't think we're going to hit it today, but 68.50, there's your support, monthly support, and then just under 64. Dennis, Joe C. in the chat. Dennis, on such a long-term hold like MA, you're being up so big, what's your end game? When do you take profits? Or is this something you're going to hold on to and perhaps pass on to your kids?
I would say I would take profits in something like this if the story changed. If I saw, a reason that I thought, MasterCard and Visa had serious competition coming after them. And, and you can say, oh, maybe Square is that competition, or maybe there's, their payment processors. I mean, it's still MasterCard and Visa. They've got control of, obviously this market, and they got the stranglehold on it. I don't see it changing anytime soon. So typically when I hold things, this long and I'm up this much, I usually don't sell them. But, if the story changed that I was uncomfortable with it, I would get out. So there is still reasons, and sometimes that I do book big gainers. But when you're up this much, I'm at $16 on average. You know what I mean? It's, this is what you want. This is the whole point to buy and hold sometimes, is to have stocks like this in your portfolio, kind of take it over. Now, that being said, I have sold some of my MasterCard on the way up. So I don't have the entire position that I originally came with. And the main reason for that is it was just starting to dominate my portfolio. So I lighten it up a little bit. When MasterCard, let's say I got 95 stocks or 100 stocks in my portfolio. You get one that goes up 1,000%. Well, if you have 1% each, now it's 10%. I feel like it's too much of the portfolio. And that's why I start to, take a little bit of profits for that reason too, when it starts to dominate it. But I did sell half of my MasterCard a few years ago. And now I'm completely playing with the house's money. But, not even that. I'm in at 16. So very little chance I'm ever going to be down in this position. I've got probably 4 or 5 stocks, and I'm up, greater than 500, 700%. And those stocks, obviously make, make buy and hold worth it. Now, that being said, when I'm holding that long, I definitely have stocks that are dogs. I've talked about GE multiple times. That, that is one that, I've held my portfolio for 18 years. I actually sold part of it. Why? Because I don't like the story anymore. So I've actually taken some of the loss here on GE because I think the story is broken and I don't know if they can fix it. Maybe they fix it. Maybe they get me back in. But, when I'm, and obviously you got to wear 2 hats all the time. As a trader hat, it's completely different than a fundamental investor hat. As a fundamental investor, I'm trying to talk about the story. Do I like the story? I look at Snap versus Twitter, just like my analysis earlier. That's with my fundy hat on, saying, hey, I think Twitter is worth a hell of a lot more than Snap. So why am I going to buy Snap at an $18 billion market cap if I could buy Twitter at 22? Now, I don't like either of those from, at the market cap. I think they're both still slightly expensive, which is why I don't own Twitter or either of them. But I definitely wouldn't buy Snap. If I was going to buy anything, I was going to buy Twitter. So, it's just analysis. And I went on a wild tangent there, but that's, just my thought process when I'm putting stocks in my investment portfolio.
Okay.
And where
all
else?
right. I don't know. I don't know where we're going with that. Okay.
We got a million earnings stocks. We could talk a whole bunch of different. What I wanted to talk here, and here's something I had on my list to talk. Have you seen the chart of Lockheed Martin the last 5 days since they reported earnings? Lockheed Martin reported earnings like a week and a half ago. The stock was trading up, I believe, to 370 on those initial good numbers, and they came and they took this and beat it up that day for 30 points. What happened after that? Some people were saying, oh, well, it was a good report. It's going to bounce back. It's fallen almost another 30 points since then. And it's in free fall right now. And this is just a story that was priced for perfection and no longer the case. You look at Lockheed Martin, it's been straight up for basically a decade. This is the first time it's in serious looking trouble if you look out to the monthlies and you look at this. Like this trend from 2013 has been straight up. Trend kind of is in jeopardy here on Lockheed Martin. General Dynamics, NOC, HRS all look the same. HRS actually coincidentally reporting earnings, I believe here. Are they due this morning or tonight, HRS? They were this morning. Did HRS report?
They did report this morning. Yeah. You want the numbers?
Yeah, give them to me.
$1.67 is a 5-cent beat, 1.6 versus 1.55 billion on the revenue. So they beat both those numbers. The fiscal year EPS guidance is in line.
All right, this is probably, there's nothing traded here on Harris Group yet, but just the way these other stocks have traded, even if this pops, I think it gets met with sellers. Here I am talking as my book. Harris is one of the biggest positions in my investment portfolio, again, because of this buy and hold stuff. I bought this thing back during the financial crisis or after it around $27. It's now 151, so I'm holding on to it. But these stock charts do look broken to me, at least on a short-term basis right now. All these stocks, defense stocks, are out of favor here. Boeing too, you can look at it, same story, but it hasn't got hit as hard. But you know what? If I was in Boeing and I saw the charts of Lockheed Martin, NOC, General Dynamics, I know a little bit different, but they still kind of group together, and traders still group them together to a certain extent. I'd be concerned with Boeing as well. I think Boeing, could have some tough sledding here ahead. So these charts just don't look good, Joel.
No, not at all. And I'm just mulling in my mind. You had the reports, you had the good fundamental analysis, but maybe we're not going to war. These stocks, a lot of rhetoric. When Trump came in, now things are getting nice with, North Korea. So a lot of the buildup was anticipation of perhaps getting more engaged in military battles, and that's kind of dissipated as of late. And we did that little strike there in Syria, but besides that, it looks like we could be staying out of trouble. And besides the reports, that's the only thing that I could give that's
it's a good point you're making, though. I mean, that was coinciding right near those highs there too. I can remember when those headlines coming out. I think we may even talk about that on the show. And I was saying, and I was at least saying in my head, I don't know if I said it out loud, but I know I said to my one buddy over at Bright Trading, we were just saying, you wonder, like, if you're getting a little bit more, like, less concerned with North Korea and stuff, it can't be good for the defense stocks. And, since then, we've been straight down. I mean, there's other reasons, and, they found reasons to sell them after the earnings. But, I mean, now you think about these stocks, it's so hard to get these losses back.
Yeah.
Because there's so many people that got annihilated here. And everybody plays the loss aversion game, where they don't want to sell at a loss. This is, just what people, an investor mentality has. They get down a stock, they're going to wait till it comes back. So when you see, a stock's trading in an area for 3 to 4 months, and then all of a sudden, boom, takes out all the lows. Everybody who bought in the last 3 to 4 months is hungry to get their losses back. So get back up there, and there's a million people waiting to sell. So it's so tough. So now you look at this chart, even like, Lockheed Martin or General Dynamics, and you think this thing gets anywhere, it's back into the mid 205, 210 GD, there's going to be sellers all over the place. Lockheed Martin gets up to 315, 320, sellers all over the place again. So the path of least resistance, believe it or not, as a trade, is down. So you can say, how is that possible? Just saw 50 points. How can the path of least resistance still be down? Because there's so many people trying to call the bottom, and those people get punished there too. So my thought process here is, bounces are to be sold in all of these names, in my opinion.
All right. And I mean, you can wait for a 50% retracement and, look for a bounce. But right now, it doesn't look like any bounces are coming soon. Dennis, we're going to wrap you up here with you for a minute. We're going to stay on, but I just wanted to get your general market thoughts here. Snow Reaper 42, this was real early in the Google chat. Thoughts on the current market conditions here. And I don't know. I mean, we've had these pops and we've had some good reports. Things have sold off. I don't know if John Dotson is in the chat or not, but he is just pounding the table on the bear side here. I can't really make a bearish case for the market yet until we take out those fab lows. And I can't get super bullish either until, we get back in the upper end of the trading range. I just wondered what's your overall market, not day trading, but
I'll
overall
say the
market.
same thing I said the other day. You're in the middle of the trading range here. One concern is that pretty W pattern that me and Mark Chaikin were talking about a couple of weeks ago when Mark was on the show is starting to look a lot uglier. And that W pattern I'm talking about is the February low, and then we had the rally up to, M, and then the double bottom there in April. And we were hoping, some consolidation and then the move higher. See stocks like Apple, you think, this is, what you want to see. But what the response to these Apple earnings is terrible. I mean, here you are. You have Apple trading up almost
4%.
Almost $7 in the pre-market. And you've got a bunch of other techs trading down. You have the S&Ps trading in the red. The Qs are barely holding on to a gain. If you would have told me yesterday that Apple would be up $7 and this market would be down, I would say you're nuts. But that's what we're seeing here this morning. And you know what that's telling me is there's a lot of other sellers and a lot of other stocks here today. And I think this could actually turn into an ugly day, believe it or not. So good earnings from one of your leaders, maybe the leader, and it's not helping this market out. That is concerning. I honestly think, it depends on what the Fed says today. We're going to get the Fed, which is a whole nother, can of worms that can be thrown at this market. But I'm somewhat concerned short term here. My W pattern is not as good looking as it was. We're not rallying on good earnings on a lot of different stocks. Some are rallying, but then you get a great, or you get some, Apple positive response to the numbers at least, but not other stocks and not other tech stocks even. And that's concerning. So I'm concerned with this market right now.
Okay. And I'll go out here and say it, and talked to Sean Udall yesterday, and he gives me a heads up on, his overall market thoughts here. And he's looking for a ripper to the upside, Dennis. He just thinks that, these earnings seasons, the way, everybody reacts, it's kind of funky. But he's looking for a ripper north. So
that's why we got a market.
That's why we do.
That's why both sides. Right now, if I'm just looking here, and I got a lot of reasons to not be comfortable with this market right now. Okay. Long term, I'm sticking with it. I didn't lighten up my investment portfolio, so I'm not scared enough to go out and sell a whole bunch of stocks here. But short term here, as a trader, I'm looking for pops to sell. Not dips to buy, rips to sell. Sell the rip, not buy the dip. That's my mentality right now in this market.
All right, Dennis, we're going to let you go. We got a few more stocks to cover here, and then we're going to bring in Gene Munster from Loup Ventures at 9:15. Dennis, if you have any questions, just send them over to me on Skype, and I'll throw them at Gene. I'm sure he'll have some pretty good answers for us. Just got to figure out what happened to Aspirion Therapeutics there, Spencer, getting just lit up like a Christmas tree here in pre-market trading.
Yeah, to be honest, I'm not sure because the headline reads positive. They had a top-line results for a phase 3 study that met the primary endpoint. Earnings this morning, but I don't really think we care about. Do we care about earnings on a biotech like this? Their earnings missed by 17 cents, $1.73 cent loss versus a $1.56 loss estimate. I don't know if that's really it though, but to be honest with you, I'm not really sure what's going on. I was looking at this a few minutes ago, and I'm not entirely sure because the drug news was good.
I'm just, I wasn't going to say it, but B. Trudell here in the chat, when I see something like this and you see the news, you think about deaths. And what he's saying here is perhaps the mortality rate. This is just coming from the chat. I cannot confirm or deny this information, nor is it trading advice. Mortality rate was higher than expected. So if you get good results in a higher mortality rate, I don't know. And you see the way the the street is interpreting that. So let's wait. Let's wait for later confirmation. There's no confirmation. It's trading down though. Something happened. Someone read something they didn't like. So we'll look more for that information as it becomes available. Someone's just got their foot on the gas, trading at the lows of the pre-market session. That low right now is 47. New low, 47 even. Will the 47 evens go here? While we're on the show, we'll take a look. And I'm going to my monthlies here. And I am looking for 43. I love 43 if I was short, and I'm not. 43.10 was your November 2017 low. Then you had another low at 42.65 in October. And in August last year, you had a 43 even low here. So 43, that's the number. If we keep going, just trying to get a little bounce off 47.
All right, let's go to Wayfarer, which we didn't get to.
What's going on with that?
And if you have earnings or any stock you want us to get to, just throw them in the chat. We have about 10 minutes until Gene, so just throw them in now and we'll get to them if we can. Wayfarer earnings this morning, 91-cent loss. They missed by a penny. Sales 1.4 versus $1.36 billion, but they did give some favorable guidance on the conference call, which is why we're getting that pop this morning in W.
Big pop. Didn't Andrew Leff jump on this one?
Yeah,
a few times?
He jumped on it. When's the last time he said anything? February 22nd.
February
22nd.
February 21st.
22nd.
Second. Okay. Yep. That was the big down day. It continued lower, put just a gorgeous double bottom. Let's call it a triple bottom, just above the 60 whole number here. The low of the move was 60.53, but that's history right now. Moving up, trying to work its way over $70. You did get a print at 71 even, so that marks your pre-market high. That was done just on the last 15-minute bracket. If I'm looking, I'm really holding out for more profits in this one. I'm holding out for the double top from April 23rd and April 24th at 73.61 and 73.71. Maybe hurry up and get your offers out there at 73.50. But nice pop for Wayfarer.
All right. Tickers are flying now. Tickers flying now. So let's go with one reporting after the bell. Kraft Heinz. Well, 84 cents is what we're looking for on the EPS for this afternoon. We're looking for sales at $6.37 billion in KHC. What is the chart showing us this morning?
It's an ugly chart here. And full disclosure, I did hop in this one at $60 long term here. I do have a little bit of dividend protection. I believe yield's probably gone up since I bought it. Street's bearish on this. It probably gets any kind of good report. You'll get a pop. I'm hoping just to form some kind of consolidation or trading range like it did at 60, 61 area before it broke down. This is a re-IPO, so we are trading at all-time lows. Just hope it's a decent report. I hope they say something good. Low of the move, low of the move was made yesterday at 55.30.
All right, let's go to looking at the chat. Let's go to Clorox. They also had earnings this morning. They beat $1.37. That's a 6-cent beat on the EPS revenue, 1.5. Basically in line with the revenue, $1.51 billion. The fiscal year EPS guidance came in line. The sales guidance came in line. Everything in line pretty much for Clorox.
Just another stock in the Wall Street's doghouse after hitting its all-time high in December at 150.40. Just been rough sledding here. Traded up $2 here. Just hit. Well, the big pop was over 119. 119.94. I'd keep an eye on that level because it's a nice round number. Intermediate, it better hold 119 even because you have a double top there from Friday and Monday.
Let's go to one that we discussed briefly earlier, but I don't think we looked at the chart of it, and that's Skyworks Solutions, SWKS.
All right. keep an eye on Apple. Apple will be your leader for the supplier stocks. Holding on to gains here, up $1.91. The initial surge in after hours trading took it to 94 even. So I am keeping an eye on 94 even. That coincides with your April 20th high of 93.70. So there's a big level. Backed off $1.20 from there. If you really wanted to go into breakout mode, it gets over 94. Your next daily high is not till 97.24, but still a little, still a stock in the doghouse.
Going back to the chat, where else, man? We had so many for a while there. Let's look at Estee Lauder, EL. Didn't even see their earnings. Yep, they had earnings this morning as well. Man, the whole damn market had earnings this morning. Q3 EPS $1.17 is an 11-cent beat on the estimate. Sales of $3.37 versus $3.24 billion. So beats there as well. The fiscal year EPS coming in higher than the estimate. $4.37 was the estimate. They see it being $4.38 to $4.42. That's the range they gave for the fiscal year EPS.
Okay, trading at the lows of the pre-market session, 140 even. If you're looking for support here, I can give you two daily levels. 139.56, that was your March 5th low. And then if, in fact, that is taken out, not much support until you get into the lower 137 handle. This is called 137.20. That splits the two lows from March 1st. Of 37.04, March 2nd at 37.41.
Someone noting in the chat that Spotify is due to report after the bell today. Let me confirm that in my pro. I think that is correct. Spotify. It's the first report since their IPO. Do you want to look at the chart? I mean, not. It's like a month.
I don't mind.
You don't mind?
I don't mind.
All right.
These things come all the way back, and if you want to try and sell the all-time high, you might get a chance today. That's 169 even, although it looks like someone has a little bit of opinion here, just under 167 in pre-market trading. 166.80, you've hit that in a couple brackets. That was just between 6 and 6:30.
All right, let's break out a minute early. It's 9:13, almost 9:14 now. We're going to go and grab Gene Munster. He's the managing partner at Loup Ventures. One of our favorite analysts on the street, covers Apple, covers a few, well, doesn't cover them per se, but does his research on them. And we will be right back with Gene Munster of Loup Ventures in one moment. Stay with us. Welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin on now with Gene Munster, managing partner at Loup Ventures. Gene, how is your morning? Where are you right now?
I'm on the corner of Samsung and Montgomery in San Francisco. The office that I had my first meeting in had a pretty loud music in the lobby, so I'm opting that the street is actually slightly better. So in San Francisco, Spencer, to answer your question.
Okay.
All right, let's get right to the Apple report, and we just had a great breakdown of it by one of your proteges, Michael Olson. So I'm going to throw some of the same questions at you that I did at him. See what kind of answers we can get. What did you like about the report? Where was the surprise in the report for you?
The biggest was they didn't guide down for the June iPhone number, and I think that might not sound like a big surprise per se, but it really is indicative of a bigger story that's going on here, which is that the iPhone business is slowly moving into a phase of more predictability. That's been something that investors have asked for the past 5 years, and we started to see it. So that was the biggest surprise. There wasn't a guide down. Let me just put that predictability into some context, is that in the December quarter, iPhone units were down 1% year over year. In the March quarter, it was up 3%. And then fast forwarding to the June quarter, the guidance was for up 2%. So the good news is that's generally stability. I would constitute that as stability. The bad news is iPhone is not a growth business. I mean, we're talking 0 to 5%. So I'd say is lower growth. So I think the good in that case outweighs the bad. Second big surprise, obviously, was around services. And I think that's indicative of something that Apple's talked about for a long time, which is you get these devices in people's hands, they're going to spend more. And Mike, I'm sure, ran through the numbers, but they were impressive, almost double the growth rate that analysts had been expecting. So those are the two big surprises.
Okay. And on the negative side, was there anything that you were a little disappointed in?
I think on the negative, there was some pressure around margins that weren't expected. Usually they slightly beat the margins. In this case, they slightly missed. It wasn't a slam dunk, grand slam kind of a March quarter, and that was probably the biggest negative. But if you put it all together, there wasn't anything that was a real obvious negative. It just wasn't a spectacular quarter in terms of upside.
All right, let's move on here. Same question.
Actually, wait, Gene, can I jump in real fast? Gina, I got a question about the other parts of the business. I've been thinking a lot recently about original content and just areas where Apple doesn't necessarily have a huge head start over their competitors, like areas like Apple Music and Apple TV and things like that. How do you see Apple fitting into those spaces right now as they relate to their competitors in those respective spaces, as they relate to the Rokus and the Spotifys, et cetera?
So those are all growth areas in tech, and they're all things that Apple has started in, but really have not made a ton of headwind. And so I think the answer is that they are largely opportunities for Apple to gain share, whether it's in the connected TV market, a topic that is a sore subject for me, given some past incorrect predictions around Apple TV. Just to be clear, we don't think Apple's going to come out with a all-in-one TV, but they do have an interest in pursuing and continuing to get more Apple TV, the hockey puck, in the market. The music side, I think, is a great example of something that they've done well, been late to the game, but done well. So they are gaining share right now against Spotify. They have 40 million paid music subs. Spotify's at about 72 million. But 4 years ago was Spotify had 30 million and Apple Music had 0. So I think that they've done a great job of, even though they've been behind, when you put all this together, these are small wins that add up to being something that is measurable in terms of investor psychology about different ways they can grow. The last category I would add to that is something that they're late to, but have made progress more lately, and is wearables. The watch started out as generally a disappointment, but the last 2 quarters has grown at 50%. And so I think you have a sense there that there's some room for them to grow in that market as well.
Do you have an opinion on where they are in Apple Pay or any ideas and how much revenue is associated with Apple Pay right now?
It's a fraction of a fraction. So think of it as probably less than 0.5%, but they did talk about some of their progress there. They said that the usage is was up 3x year over year. We estimate that there are probably about 125 million active Apple Pay users, and active is defined as once a month. There's about 800 million active iPhones. So it's still a relatively small base, but something they're getting a lot of traction in. And so I think that is that's an area, payments is an area that Apple is not going to want to make money in, but is an area that they're going to want to try to differentiate. And I'm going to make a prediction here is that within the next year that you'll see an ad campaign similar to the shot on iPhone that billboard outdoor campaign that you'll see where they'll do selfies and different photos taken on your iPhone. I think that they're going to start to play up the wallet aspect, the digital wallet, Apple Pay aspect of the phone as a defined feature to get you to buy more iPhones.
All right. Also, what are they going to do with all that cash, increasing the buyback? It hasn't been in their mode to do acquisitions or whatnot. Raise the dividend. That's also a thing that they've done. Any ideas? I mean, are they going to use it for AI? Are they going to show up in the driverless car arena? What's Apple going to do with all their cash?
They're mostly going to give it back to investors. And this is a part of the story that I think is going to become increasingly more important. That's probably an understatement. And I dare say that this is going to become more than half of the story over the next 5 years. Is what happened last night, that $100 billion buyback was essentially in line with the street. So people are kind of glossing over it today and saying that was in line with the street. And Apple, we all know that Apple generates a lot of cash and buys stock back. But what was more important is what the CFO said, just in terms of they still see their stock as being undervalued. And if you fast forward every year that they can buy back on average $50 billion in stock, it's almost $900 billion market cap now. But you can build an argument that they can move the stock 3 to 5% higher every year just by buying the stock back. And this is a distinct advantage that Apple has versus the other players out there, versus the other FANG players, is that they have so much cash. And it's not an exciting part of the story to talk about owning the stock because they've got a lot of cash, they're going to buy the stock back. But the substance of this is going to be just as exciting as any growth story. And you're just going to see they're just going to crank this higher. I mean, we don't know. We don't have a clairvoyance in the future, but I think that this is going to be a measurable lever in terms of how they can impact the stock going forward.
All right, I just want to ask you about one other stock here, Tesla. Is it starting to weigh on you a little bit, Gene? We've had our debates back and forth here. Man, those deliveries and the vehicles and problems. Actually, Dennis showed me a picture of a car that was recently delivered where it had 2 different colors of white on the bumper here. Are you losing your confidence in Tesla to deliver all those cars they're supposed to deliver?
Haven't lost my confidence. I occasionally have a bad day around how I think about Tesla when they miss yet another target. But I think that the substance of what's going on here is undeniable. Yesterday I was in a Lyft and the driver had a Chevy Volt, and we were talking about his car, and he paid $38,000 for it. And this thing feels like a Chevy Volt. But when you're thinking about for a similar price, a Model 3, it's going to be a no-brainer for people. I think once those cars get into the market, they're going to figure out how to get the bumper colors right. Once they get these cars into the market, I think it will go viral, and you're going to see something that we've never seen in auto before in terms of a growth and interest in a vehicle. And so I'm still right there supporting it. And it's not just about the car; it's about their broader vision, accelerating the globe's adoption of renewable energy. This is a play on everything from solar to energy storage with batteries to energy usage in cars. So I think it's just an autonomy too, eventually, self-driving cars. And so I think you can't build a better framework to think about growth in tech than Tesla.
All right, Gene, last one, and we'll let you go. I want to wrap with Apple. We're at 169 this morning. I know you don't give price targets anymore, but where are we in Apple at the end of the year?
I think it moves. That's decision, as you said, Spencer, is up to the investors to decide what they're going to pay for it. I think that the levers that they have around the buyback, and then don't forget, hope springs eternal. They're going to have these new phones in the fall, and over the next 6 months, we're going to probably hear a lot about that and a lot of anticipation about what that can do for demand. And so I think I'll just say this, I believe that it will move higher.
All right. Gene Munster, managing partner at Loup Ventures. Gene, thank you so much for the time. As always, have fun, whatever you're doing out there in San Francisco.
Thank you, guys.
Thanks, Gene. Okay, Spencer. Tired here. An hour and a half of me. You're going to need to take a little break after this?
This is throwback to the old days of PreMarket Prep when we used to do an hour 45 minutes every day.
How do we do that?
I don't know. All right, that's going to be it for us today, folks. Hope you enjoyed the content, the chats with Mike and Gene. Hope you all have a good morning. You have 5 minutes to get ready for the Open. If you've been listening to us this whole time, stop it. Get ready for the Open. You have 5 minutes. Hurry up and do that because it's almost 9:30. That's our show for the day, folks. Have a good one. We will be back with you on Thursday.